All right, this is the weekly coffee video for the week of Monday, September 23rd. Still reflects the December contract. I'll get to this chart in a moment, but first I'm going to backtrack a little bit and show you last week's chart. I was showing strength above this 99.70 to 99.95 region, expecting at least 105.75 and quite possibly the 110.60 to 114.60 region over the next, say, 3 to 5 weeks. Now, as it turns out, the resistance at 105.75 is the area that did essentially hold. We didn't actually test it, you can see, but it is a speed line. And so I'm backtracking a little bit. I'm readjusting this 99.70 to 95 area is not significant anymore. And so this is what we have. I've got 104.50 as our resistance, can contain weekly buying pressures. And inside that, we have a wedge formation all the way back down to 93.70. This is a level that you should be familiar with. This 93.70 is also this horizontal series of lows. And inside that area, we've got 97.85. So 97.85 can contain session weakness, but if we close below 97.85, say on Monday, I think you should expect 93.70 within the week, where the market can place a weekly low. Now, inside this 93.70 to 104.50 range, which is narrowing gradually on a week-by-week basis, the market can be characterized as two-sided. We could actually fill this wedge out well into October trade. And a settlement outside that area indicates the next significant support or resistance level on the longer term charts in the respective direction. So let's cover the possibility of closing this week above 104.50. If so, let's take it. Where's the 110.30? There's a couple levels here. 110.30 is a formation that held the highs last July. It can contain, and it really is the start of a range of resistance up to 114.35 right here that can absorb buying really through the balance of the year and quite possibly well into next. Now I've got 102.90 here. That's also a speed line. Same speed line really, but this is a different chart. This is the weekly continuation chart, volume-based rollover, whereas that 104.50 level is the December contract chart in and of itself. So 102.90 respectable area, but I'm only calling it minor. I really think 104.50 is the point to take out before we can expect follow through to the upside into later October trade. And as I just mentioned, this 110.30 to 114.35 region then expected within probably 2 to 3 weeks. The 110.30 to 114.35 area, like I said, able to contain buying through the balance of the year, possibly well into next. And this area is also a significant upside tipping point into next year, or let's say into the first quarter. I'll talk a lot about what those targets would be if we approach this area anytime soon, but we're not going to so long as we hold below 104.50, an area that can contain weekly buying pressures. Now 93.70, if we close below 93.70, let's take a look at what those downside targets would be. They'd be in the 82 handle. I've got a little bit on the way down at 87.35, but it's not really significant. That's worth maybe a weekly containment. Really what I'd be looking for is the 82.30 to 35 area. 82.35 is a long-term channel bottom on the December contract, and 82.30 is more of a midterm channel bottom on the weekly continuation chart. In this area, 82.30 to 35 would be a 3 to 5 week target if we close the week below 93.70. So to sort of re-clarify, we've got 93.70 bid, 104.50 offer, two-sided market well into October, inside of which closing above 104.50, expect this upper area 110.30 to 114.35 within several weeks, where we can top out through the balance of the year. Inversely, closing below 93.70, expect that 82.30 to 82.35 region within 3 to 5 weeks, where we can bottom out through the balance of the year. And that's all that needs to be said for this week's weekly coffee.